We are at a pivotal moment in time. Strong forces are at play. Cyber risk, geopolitical conflict, macroeconomic volatility, reshaping the world and our lives. The real game changers are generative AI and climate change. And despite the complexity and challenges ahead, there are also massive opportunities for businesses and society. These are the key factors at play, and they are impacting global development and guiding leaders' decisions on the necessity for reinvention. Topics covered in PwC's 28th Annual Global CEO Survey.
Hello and welcome to Davos. We're here for the launch of PwC's 28th Annual Global CEO Survey. I'm Nisha Pillay. It's my great pleasure to be with you today. And in a moment, I'm going to be joined by Mohamed Kande, who you just saw in that video there. He is PwC's Global Chairman. Now, we're gathered here in Davos at a time when the business world is facing some real doubts. It's at a crossroads, you might say. On the one hand, in the short term, global CEOs are feeling rather optimistic about the future. On the other, they can see looming on the horizon significant economic risks due to rising economic tensions and geopolitical tensions. So we're going to be exploring all that in our survey. We'll give you the highlights now, and then you can download the full report later. And then Mohamed will be ready to answer your questions here in the room and from those who are joining us on the live stream. Thank you for joining us, by the way. So meanwhile, while all this is going on, we're seeing emerging technologies like Gen AI. They're already having an impact, aren't they, on the way we work and the way in which businesses are managed. This year's survey, well, we spoke to over 4,000 CEOs around the world. Now, you may not agree with everything they say, but you will agree that their views are influential, not just for their own organizations, but for the wider impact on the economy, global economy, and society as a whole. So, shall we find out what's on their minds now, what's worrying them, what they're relaxed about? We're going to start with the short term, and I'm going to invite Mohamed to come on up onto the stage and join us. Mohamed Kande. So where are we then? What are CEOs expecting in the short term for the global economy?
You know, Nisha, first of all, I was so looking forward to this moment to be able to talk about the result of our CEO survey that we conducted with, as you mentioned, more than 4,000 CEOs. And it was quite revealing to understand the mindset and the psyche of the CEOs that we have around the world. And the first data point that we get from them, I think on this chart, I will look at the orange graph, is to understand the confidence that we have in the system today.
Yes, ladies and gentlemen, look at that orange graph. That's telling the story.
Think about it. In 2023, right after the COVID years, major CEOs around the world had 18% of them only had confidence that the global economy was going to grow. That number rose to 38%. And now it is at 58%. Which means that they know that that economic growth is going to be a factor with all of the changes that we just discussed into helping the company grow. One thing that is interesting is the fact that you have differences by country. Now, some of the feedback that we're hearing today from Germany, for example, is a little bit more pessimistic, as you can imagine.
You can say that
But
again.
there is another country that is very, very optimistic, which is about India, where 9 out of 10 CEOs are pretty much saying that they believe in global growth. Why is a data point important? Because when CEOs believe that there will be economic growth, they allocate capital, they spend money. So it's one of the best leading indicators to see that how companies are going to spend the capital to continue to foster the growth of the business.
It's a good leading indicator.
Absolutely.
Okay, so then I'm assuming that this means that CEO expectations for their own companies are also pretty optimistic. Is that so?
Yes, that's exactly what we find out of the survey, that today about 42% of the CEOs expect to increase rather than decrease headcount. Think about it. 42% of them are saying they will increase headcount, 17% they will not. 42% is a lot. And again, a very good leading indicator of capital investment, of believing in the economy, is the fact that they will continue to acquire human capital. Now, you have some differences depending on which industry you're referring to. I would say the technology industry, 61% of them, not 42%, 61% of them are saying they will increase headcount. Real estate,
Real
61%.
estate? I didn't expect that.
You know that thing that we call AI, that requires a lot of data centers? Data centers require real estate. So now you have a lot of growth also in the real estate business. Private equity and pharma life sciences. That are really the sectors that we are seeing today. Now, we have also seen a lot of confidence in some of the small and medium-sized enterprises, where you see companies below $100 million of revenue are all saying that they are going to increase headcount. So it is fascinating, honestly, coming out of the last 2 years, to see how much confidence there is in the system.
Quite a change, isn't there?
Absolutely.
But there must be some things that they're worrying about as well. What's keeping CEOs up at night?
You know, there are definitely some risk. And I would say that macroeconomic volatility, as you can see on this page, and inflation are the top two risks that many of the CEOs are currently facing. And, you know, that number is at 29%. It was 40% last year. Okay, so still 30% of them thinking that macroeconomic volatility is going to be important. But also in the feedback that we are receiving, geography matters. So sensitivity to macroeconomic volatility, geopolitical conflict, of course, in the Middle East and also in Central and Eastern Europe because of the conflict in Ukraine. You see that the reporting is actually much, much higher. But what the big takeaway is, many of the risks that the CEOs are facing today in the world are risks that are interconnected. Geopolitical tension, macroeconomic tension creates risk on the supply chain. Geopolitical tension creates cyber risk because of some of the state actors that we have out there. So the big thing that we find out this time around, that what the CEOs are worrying about is not just what are some of the key risks they have to manage, but the interconnectivity between the risks that they manage today.
I wanted to ask you about a question you've put in the last couple of years, a new question really for the survey, which is how confident are CEOs about the long-term viability of their businesses, their business models, you could say. What are their views this year?
So, you know, in the midst of all of the changes that we are seeing today, you know, as you opened up around all the conflicts that have to be managed, the risks that have to be managed, but also the confidence that they have, the numbers are pretty much the same as you can see on this chart. We get about 42% of the CEOs that still believe that the company will not be viable for the next 10 years or less if they maintain the current path, which means that they have to change and evolve their business models. A couple of additional facts. The industries that we have noticed over the last 3 years, they were feeling the most pressure when it comes to the reinvention of the business models were media and entertainment.
Yeah, got that.
Technology. Telecommunications, basically the big technology-heavy industries, industrial manufacturing, but something came up this year that we didn't have before. 45% of the CEO in the pharmaceutical industry are now saying that they don't believe that the business model will survive the next 10 years.
But why? Why pharma industry?
Niche technology. Because we are now finding that in the pharmaceutical industry, the bigger disruptor is going to be technology and artificial intelligence.
So they think that the whole way in which they run their businesses is going to be transformed, or they have to transform it?
They have to transform, and where technology is currently being applied. And that's applied to all of us because we know what the pharma companies are doing for all of our benefit, is especially in drug discovery. That is where the value is being delivered. And as we know that drug discovery and drug development takes an average of 8 to 10 years, now there will be an acceleration of drug discovery, which will accelerate the development of drugs, etc.
And we don't know who the winners will be. Yeah.
Oh, yeah. With that, we do not know yet. So
let's just step back a moment. We know that 40% of businesses are really worried about their business models, but what's driving that concern?
You know, many of the CEOs that we talked about change in the regulatory environment. 42% of them basically are saying that they worry the change in the regulatory environment, but also the fragmentation. And they're also seeing that because of what's happening with the supply chains, there is an increase in the product and services cost that they have. So that's what driving that need to, that concern about viability. Supply chain risk, the way it manifests itself with our clients, or many of the CEOs, is the fact that the cost of supply is increasing. That's what they're facing today. It's a big thing. And now there is also a lot of competition, strong incumbent competition, whoever they're competing against today. But the other thing that we're finding out is that because of technologies, barriers to entry in many industries are collapsing. So they're getting new competitors entering the industries. And the second data point that we are now getting is the fact that companies are now facing an environment where whoever they're competing against on the demand side for customers, for revenue, might be different from whoever they are competing against on the supply side. That dislocation is new in the market.
So, and what are they doing to address that?
Well, they know that they have to change their business model. So the first reinvention steps that we are seeing from CEOs with around how do they change the portfolio of products and services that they have, basically making money differently. The second lever that they're putting is targeting a new customer base, having more customers for what they sell today. Now we have some additional lever that we are seeing today, which is around, as you can see on the page, collaboration with other organizations in new ecosystem, finding new routes to market, but also implementing new pricing models. The last three are much more difficult to do. Innovation with new product and services, new customer base is something that many companies can do. Partnership across ecosystems, finding new ways of getting to market, and also new pricing model based on consumer preferences today. They're the three areas.
That's more tricky, isn't it?
That's more tricky, yeah, absolutely.
So, from the big thing is innovating new products. Does that mean they're moving into new sectors altogether?
You know, it's funny you're asking that question, because what we found out is that nearly 4 out of 10 CEOs told us that they are now starting to compete in at least one new sector. So as I mentioned, the barriers to entry, where you have companies being concerned about new entrants in their own industries. Many of the companies that we talk to are also saying that they are entering other sectors.
Because they themselves can
they need
move
to do
more
that.
easily. Yeah.
So 40% of the CEOs are saying that over the last 5 years, they entered a new sector. Now you have many small initiatives, but now 1/3 of that 40% are telling us that 20% of the revenue is now coming from that new sector. This is telling. So you see that you have fragmentation, but also expansion into different sectors. And we are seeing that happening with companies from all sizes. The key takeaway of this one is that sectors are converging.
What do you mean by that?
I mean by that the technology industry, the semiconductor industry, the energy industries are all part of the same ecosystem. Now, many companies are used to not work together or compete, or not even have to collaborate, and now finding themselves that if they want to deliver more value to the customers, they actually have to start collaborating. So,
is it enough? Do you think that these big global corporations are doing enough to reinvent themselves, to find new business models?
Unfortunately, the numbers are not really tracking, because it's only 7% of revenue in total over the last 5 years that are coming actually from distinct new businesses for companies. So as you can see, most of the companies today, you can see on the chart, 78% of them are still deriving the revenue from the core businesses. So reinvention is happening, but it's still slow. That's what we're finding out.
Yeah. So, you've mentioned technology a bit during our conversation so far. So let's talk about it directly, specifically Gen AI. I know many of your clients have been investing in new Gen AI tools. Are they seeing any benefits? Are they seeing any payoffs?
Well, the initial payoff that we are seeing with Gen AI is really around efficiencies. So you can see that 56% of the companies are saying that they are getting efficiency from their employees when it comes to Gen AI. That's a good number. And now you see that only 34% of the companies are saying that they are getting some profitability out of Gen AI. Okay, that's a number. But really, you see that the comment around headcount reduction, 13% of the CEOs are saying Gen AI will lead to headcount reductions, but 17% of them are saying because of Gen AI, they will hire more people.
But that's unexpected, isn't it? I thought Gen AI would mean really shrinking workforces.
That was what the belief was originally, but we know that getting efficiencies with GenAI is going to become table stakes. Productivity improvement, what we are now saying that is more around looking at the profitability.
Right.
And also ensuring that companies can generate more revenue with GenAI. So it is going to be table stakes. That's what we're hearing. Everybody that we're talking to will need to adopt GenAI to get the basic efficiency of the people and productivity improvement. It has not been proven yet that GenAI is going to eliminate jobs. They can augment human resources, not take away human resources. But the thing to focus on of what are the new jobs that are going to be created. Nisha, I will tell you that this is number one and the most important thing, because on the short before around some of the critical risks that our clients are dealing with, they talk about access to critical talent. GenAI is going to require the creation of new job categories. We might not have enough talent in the world to be able actually to support the strategy of many companies. And we believe that the profitability and revenue part comes from the fact that you have limited access to resources in the GenAI space.
So what are companies' expectations then? Are they becoming more realistic about what GenAI investments could deliver in the next few years?
So, it's very interesting that many companies were expecting to generate more revenue from GenAI. And I would say that the level of comfort of that expectation is really around the fact that if they invest that much money, they should expect more profitability coming in. Unfortunately, the profitability is not following that expectation. So last year in 2024, 46% of the CEOs said, we expect GenAI to deliver profitability. But it actually happened only for 34% of them. That's a reality. So they are not yet seeing the benefits or the rewards coming out of generative AI today. But it's coming. The critical thing actually to note here that trend is going to accelerate, and we're going to see more and more investment when it comes to GenAI. That door is open. There's no turning back.
Which do you think are the areas which are going to most benefit?
Well, productivity improvement, absolutely. That's a given. But where we're going to see the acceleration, how companies actually can generate, again, profitability and revenue using generative AI by incorporating it in the products and services.
Shall we ask our journalists who are joining us today if they've got some questions they'd like to put to you? And please send in your questions online too. We've got someone with a mic roving around the room, so wait until the mic gets to you. Please tell us who you are, and then feel free to put your question to Mohamed. Who'd like to put the first question? Yes, towards the back over there, gentleman in a dark shirt.
Good evening. I'm Matt Oliver from The Telegraph in the UK. Thanks very much for taking questions. I'm just wondering what your survey found about the UK, in particular, if you had any specific findings on that. The UK's obviously taken a bit of heat in debt markets recently because investors are worried about growth. Are you seeing any similar worries among CEOs about growth in the UK?
Well, I'm going to ask Marco Amitrano, our UK senior partner, to answer that question. Marco, do you mind coming on stage?
Come on up, Marco.
First of all, thank you for the question. There's a reason why David Beckham is here in Davos, all right? He'd seen some of the results of this survey early. I think, look, it's relative. The big message for the UK coming out of this survey is, in terms of a destination for global investment, for global CEOs, the UK's risen to number 2. Now, that first time it's ever been that high in the 28 years of the survey, up from 4th last year. And you might ask why. At this point, it's reflective of the UK offering us still a level of stability, the feeling of stability. Investment, as we all know, investor confidence, depends on 2 things, stability and visibility. I think visibility is a relatively level playing field everywhere right now, but stability counts a little bit more. So that's where we are with UK being a level of optimism from global CEOs. Of course, the challenge for all of us in the UK now, including our government, is to deliver on that. And I think, though, the expectation is in the next 12 months, the growth messages, the growth policies will appear that are in line to deliver on that optimism.
I must say I'm quite surprised by what you just said, Marco, because it's not what we're reading in the media at all.
Well, look, and I don't want to offend any of our journalist colleagues and friends in the room, but I think there is, therefore, what you've just highlighted, Nisha, a contrast between what journalists are saying, what they're hearing, and what CEOs are saying. I think that underlines the importance of this CEO survey to everyone reading it, is what do CEOs feel? And that's not about being in complete contrast. I think I would, in business today, of course I want to, but I'd be inclined to back what the CEOs are saying. Now again, there's going to be question marks that need to be answered and things that need to be delivered on in the short to medium term.
Great. Thank you very much. Like you were saying earlier, you may not agree with what they're saying. It's really worth knowing what they're thinking, right? Please, in the middle there, tell us who you are first.
Hi, thank you so much. This is Berfu Güven. I'm the London representative of CNBC Turkey. I actually wonder whether there's a difference in the stance of CEOs operating in the developing and developed countries. And in terms of that, do you see any difference in the stance of CEOs from emerging countries like Turkey? How many Turkish CEOs have you spoken to? I also wonder that.
So I do not have the data point about exactly how many Turkish CEOs. That's a tough question. By the way, I was in Istanbul last month, a great city, by the way. So I would say, though, the level of confidence when it comes to economic growth was actually higher in developing markets. That we've seen, as I mentioned, I say look at India, 90% in India. But there are other places like Brazil, like Argentina. And I will even tell you that even China, where the level of confidence was much higher than what we saw in the West. That's absolutely was the case, yeah.
We've just had a question. Sorry, my throat is giving me trouble.
There's one in the back there, I think, yeah.
I'm just going to bring in our online viewers, if you don't mind, and then come to you, yes? So, got a question that's come in online. It says, it looks like 2025 will be quite the year for change and reinvention. But how are US CEOs responding?
Paul Griggs, US senior partner, please come on stage. I love to do that, by the way.
Certainly an interesting day in the U.S. market. So thank you. What I would say is happening in the U.S. is if there are two words that I would use, it is certainly opportunity and optimism. And CEOs are thinking about 4 or 5 topics that are top of mind. Number one, how to capture growth, but in areas like technology transformation and AI, in areas like the deals market and how to leverage the deals market to live into lofty valuations, in areas like workforce, in areas like climate, in areas like preparedness for things that may change as the administration gets its feet, whether that's tariffs or tax or industrial policy or regulation. But opportunity and optimism, to me, summarizes it all, and certainly is what you feel when you have conversations with U.S. CEOs.
Okay.
Well said, wow.
Great opportunity. And
Today is the day, okay? As you all know.
Seize the day.
Seize the day, yeah.
At the back over there, there's a hand up. Please tell us who you are.
This is Sven by German Daily FAZ. You already gave us a funny note about Germany in your introduction. Maybe you have a bit deeper information about the CEOs in Europe's biggest economy. Thank you.
Sure.
Petra Justenhoven, who is our senior partner and chair of PwC Europe. You have the stage. I love doing this, really.
And thank you for the question. So as Mohamed said in the introductory notes, European CEOs and especially German CEOs are a lot less optimistic in terms of growth expectations in their own territory in the next 12 months. German CEOs even expect another year of recession. What they have in common with the global CEOs indeed is that they see the reinvention scheme. So they expect the need for reinvention their businesses as the global CEOs do. And I would say the wake-up call for CEOs is even stronger in that environment we are in as of today.
Thank you, Petra.
Yeah. Thank you, Petra. Shall we have another question?
Back, yeah.
From the room? Is that you putting your hand up again, Matt? Okay. You're very privileged to have two bites at the question. Okay, let's go for it.
Yes, I am. Thank you very much. I just wondered one other thing about AI. So do you have any, anecdotal, perhaps, examples of how companies are actually using AI? Just because I find it quite like an abstract idea. I'm not sure what's meant by it. At the moment, lots of people, when we think about AI, you think about things like ChatGPT. It's sort of hard to think about how it's being made, used usefully within businesses to get things like efficiencies. I have heard of some companies using it to generate auto responses to emails and things like that. But do you have any practical examples from the survey of how people are using it?
Listen, we're going to ask Matt Wood, who's our Global Chief Commercial Technology and Innovation Officer, who recently joined us from AWS, from Amazon. Matt.
Hello, that's a great question. Thank you, Mohamed. Thank you for the question. There's a couple of really common ways. We're all used to playing with ChatGPT. It's free, it's available to everyone. It's a really good way for employees and CEOs to get to that aha moment when it comes to AI. When you start working with AI, it looks a lot like a Google search. You're asking it questions and looking for factual answers. But after you start playing with it for a little while and you have that aha moment, it starts to become apparent that this is a very different type of software. AI is a reasoning and an integration engine. And so anywhere inside an organization where you need to apply reasoning or integration is just fertile soil for AI today. And counterintuitively, where we see a lot of that is actually in the regulated industries. So financial services, insurance, healthcare, talked about life sciences, pharma, manufacturing. These are industries that have had a lot of compliance requirements that maybe felt like a bit of a headwind to some of those organizations over time. But they've driven the right set of investments around data and quality and privacy and security of that data, which means that the generative AI piece is actually a relatively small incremental investment. And so what you're starting to see are things like document processing. Imagine a life insurance company. This is a real use case that we worked on. Life insurance company where they have very, very, very old life insurance documents, 90, 100 years old, that have been scanned at some point, but nobody's got any idea what's inside them. They've never been read, and the organization has no idea what level of risk is associated to those documents, and they're likely going to have to pay out at some point in the next decade or so. So using AI to not just look at those and read them, but start to summarize the risk and start to use that as an input to making business decisions is one really, really common example.
That's very interesting. So a way of minimizing risk. What do you say to what we just heard earlier about the deployment of AI tools actually being mildly positive for jobs?
Yeah, I think AI is counterintuitive. You said it earlier. I really believe this. AI is best used today by experts, and AI acts as an amplifier for expertise. It doesn't remove the need to do writing. It makes you a better writer. It doesn't remove the need for thinking. It makes you a better thinker. It doesn't remove the need for problem solving. It makes you a better problem solver. And so anywhere inside an organization, like the ones I just was referring to, where you have expertise, you should expect to see AI add value and amplify that expertise over time. Today, it's relatively modest, but as these models get more capable, that amplification will continue to grow and grow and grow. And as a result, you'll probably grow more as a result of that investment, and you tend to get higher return on investment because you are making better use of that expertise. And you tend to invest where you see better return on investment. So where you start to add AI and automation and efficiencies and this amplification, you'll see better returns. And as a result, you'll see more growth, and that growth will drive more headcount.
Okay, thank you very much. Well, he's an optimist. Any more questions from the floor? Yes, please.
Hello.
Tell us who you are first.
Hello. Is it okay? Yeah. My name is Teranishi from the Asahi Shimbun Japanese newspaper. So this survey was conducted before the United States presidential election. So I'm really wondering if you did the survey after the US election, the outcome might be changed. Could you? So this kind of the Trump risk is, how do you see the risk, see the global CEOs?
So let me take this one. So we actually asked ourselves the same question because we actually conducted the survey, as you said, before the US presidential election. But we believe that many of the CEOs that answered our survey questions factor the outcome of the US election, because I would say that in many parts of the world, you could have predicted what the outcome of that election was going to be. That's the first thing. The second thing, with the level of optimism that we're seeing coming from CEOs today, we know that many CEOs, independent of who is a political leader today, are very confident on the strategies that they need to execute. What they have to do will not change, depending on who is in power in different parts of the world. How they do it might evolve, whether about tariffs, whether about trade policies, etc. But we have seen a level of confidence coming from the CEOs today to say that the market is changing. There is a big technology disruption that is happening. There is convergence of different sectors and industries where value can be created, and they want to participate. They just want to sit back and watch what's going to happen. So the level of confidence to say, we will continue to execute our strategy. Now, depending on what happens, we'll figure out how to pivot, how to change, how to adapt. Think about the number, 18% in 2023, 58% now. The CEOs have learned to adapt. The sense of being down on what was happening in the industry, that we won't have any economic growth, they're pretty much saying that's it. We still have our businesses to run. Now 58% of them are saying we're going to go for it. And again, optimism for growth equals capital investment, equals capital deployment. And that is why for us this is one of the best leading indicators today.
We have a question online that's come in about which sectors and industry are most likely to see opportunities, pockets of opportunities, how the questioner has put it.
Okay, Carol, do you want to come and join us? Carol Stubbings, who is our Global Chief Commercial Officer.
Thank you. I would go back to Matt's point and be a real optimist and say there is opportunity for every sector and every industry. And if I think about the sectors that are starting to converge, if you think about the impact of AI, if you think about the climate impact that organizations are facing, they're really having to not just reinvent their businesses, but they're having to look at new and different value pools. They're having to create ecosystems in a way that they haven't done before. And the CEO survey is telling us that those sectors and those industries that are choosing to move into different sectors, either adjacent or completely new, are actually driving real results from those. So a couple of just little examples. If we think about the automotive sector, there's a lot of work being done around how you can use your car to drive health data. So that also then impacts the insurance company. So there's all of these different sectors talking to each other in a way that they've never done before because they realize that they can all be mutually beneficial. But
Carol, how can you use your car to drive health data?
So if you go to some of the large automotive companies, they are looking at, you get into your car, you put your hands on the steering wheel, it can take your blood pressure, it can monitor your pulse. There's all of these really amazing innovations that are coming out. And actually the insurance companies are really interested about the health of people. So we see all of these kind of Apple Watches and stuff. And actually, insurance companies can be much more prescriptive around who they insure, depending on the types of wellness programs that people undertake, so you can reduce your insurance premiums. So it's really vital and important that not only are we seeing all of these industries start to converge in new ways, but it's all mutually beneficial for each other. If you look at the healthcare sector, you know, we're seeing massive innovation, but actually we're also moving much more to a preventative environment than we are just to a curing environment. And if you think about particularly in the large Western Europe countries, where the cost of healthcare is really prohibitive, getting involved in the prevention can save huge amounts of money when you actually have to come and take the treatment. So a huge amount of innovation going on. And I do believe that the impact of both climate and AI is going to have a profound impact and actually a reconfiguration of not just the industrial system, but sectors as we know them today.
Fascinating. Thank you very much. And I think we have another question for you. Please tell us who you are first. I'm sorry, your mic is playing up. Would you mind if we get another mic to you, please? Thank you very much.
Hi,
Oh, nice, better.
I had a bit doubt as well. Yeah. Angela, I'm from Sina Finance, it's Chinese financial media platform. So I'm quite curious because I heard a speech by Carol talking about the new fantastic ideas of how different sectors could collaborate together for better innovation, because you just mentioned as well, like all the sectors maybe before they never they never worked together, but now they had opportunities, they started to collaborate. However, the example Carol gave us is about electric cars. For example, you could gather lots of data, so those data could share with insurance companies and maybe with healthcare system. I don't know. Then you have you could have mutual benefits among different sectors. But my question is, we could see lots of barriers already there. For example, we can see big pushback from US market and the European market towards Chinese electric cars. And we had lots of innovations, but this also will raise concern of whether we are going to gather all this data and how we are going to use this data. So when we see that AI is taking the front row and we can see lots of innovations and lots of data analysis, big data, then how we can break the wall, the hurdle, the barrier among different regions?
Good question. Yeah. Thanks, Carol.
Now, this is a great question that you're asking. That is why when you saw that on the survey that one of the attributed to the top risk that was that the CEOs outlined was around the regulatory environment. Because the fragmentation of the regulatory environment in many parts of the world is one of the main principal risks that many of the corporations are trying to manage around the world, whether it's trade policies, whether it's regulations on reporting for the environment, etc. So your question is right on point. It's true that it is a problem that needs to be acknowledged, but a problem that needs to be managed.
Yeah, and you need to have real will to do that, which is obviously always a challenge. Would you mind if I snuck in a little question, ladies and gentlemen, to Mohamed, since we're here at the World Economic Forum, and it has this big theme which has been I've been puzzling about a little bit, which is the intelligent age. And I've been trying, what exactly is it? And I wondered if I could ask you, what does that mean to you, the intelligent age?
It talks also about the collaboration, right? Collaboration in the intelligent age is what we are hearing here in Davos. But we are very optimistic, and I'm going to share something with you. This environment that is happening today, the thing that we just talked about, the result from the CEO survey confirm that we are getting back to an age of innovation. I don't know if many of you remember that something similar happened. It was more than 20 years ago. It was the beginning of the mobile internet.
Mobile internet.
Mobile internet. It was when the 3G wireless networks were launched. It was launched so that you could have efficiency and standardization in the networks.
Right. So the beginning of the 2000s.
I believe in 2001.
Right. Okay.
None of the wireless carriers thought about the fact that the cell phone was going to be the primary device to get access to the internet. No, that was not why they built it. But we found out that now the primary device to get access to the internet was a cell phone. Before that, before the 3G network, every connection to the internet was a computer. What did it create? The invention of the touchscreen phone that each and every one of us have today. The invention of the iPhone. And there was so much data coming onto the internet, you start having e-commerce, and data needed to be curated. Apps got created. And when apps were created, new companies to trade, and some of the big ones around social media, got created too. And all of that information, where did it go? Where did they store it? On the cloud. So imagine what I just said. When that investment was made in 2001, nobody thought about the level of innovation that was going to be created. And most of the companies that are the most valuable today on many of the stock exchanges are companies that were created or that adopted all this business model, all that innovation. 3G, mobile internet with a spark. Today we have a new one.
So you think we're at a similar moment?
We are at a similar moment where we don't have to look for the answers, we have to look for the inputs. And here it is that we have massive innovation with Gen AI that is transformative. Matt mentioned it. New collaboration between different sectors. It's not what we see today that is to be managed. The efficiency game, like the wireless carriers did many, many years ago by launching 3G, that game will pass. It is going to be about innovation.
And some of that we're not going to be able to predict at this moment.
No,
is that what you're saying?
We can predict. It's a matter of choices, it's a matter of innovation, it's a matter of investment. So when we hear from the CEO survey that many of the CEOs are saying that they believe in economic growth, they will continue to invest. Why? Because innovation is going to be critical. But there is something that is different about that intelligent age. What does it mean? The last industrial revolution was a digital revolution. We all know that. The industrial revolution before that was in the physical world. It was scaling of physical assets. Fourth industrial revolution, scaling of digital assets. The intelligent age is going to be both. The scaling of physical assets, data centers, real estate, physical infrastructure, and artificial intelligence and new digital models. Because of that, new companies will be created. New business models will be created. That is what the intelligent age is. And we know that in these new business models, collaboration across industries, across companies, is going to be critical. We just witnessed a spark called Gen AI. Let's see what the next stage of innovation is going to be. We believe that there is more to come there. And I will tell you, we PwC choose to participate and even contribute a lot to that intelligent age.
That is so interesting. And it's like we're peeking behind the curtain where we don't know what we're going to see. We've got a question that's come in online. CEOs are worried about the lack of availability of key skills. Yeah, we just heard that, didn't we, from one of your colleagues. How are they going to power innovation to reinvent their businesses without the right talented people?
Well, that story is going to still be continue to be played because, you know, there is this move around localization of supply chain, localization of talent and all this. Guess what just happened with the new ecosystem that we just described? In the new ecosystem and industries that are converging together, they're all global industries. The game of artificial intelligence is not a local game. It's a global game. So companies will have to look at resources.
So your talent pool is a global.
The talent pool will need to be global. There is no choice today. So more to come. And we're hoping that next year, when we're to talk about the Global CEO Survey, we're going to have some additional data points. But the future is here. It has already started. And we have witnessed similar environments in the past. What we have to do is to understand what's going to happen next. But we truly believe that new value is going to be created in this intelligent age. There will be winners. There will be losers. But it's going to lead to value creation. It's going to lead to job creation. And I think the biggest thing that we are seeing today, it is going to be a global game, which means that all countries around the world get to participate. So.
Well, he's definitely an optimist. Mohamed Kande, thank you very much for a really rich and insightful conversation.
My pleasure. Thank you very much. Okay?
Thank you to all of you for coming. Thank you for joining us online. There's a whole lot more in the CEO survey. Why don't you just go to the website, ceosurvey.pwc. It's up there on the screen. Lots on different regions and different sectors. We do hope to see you again next year for the 29th annual Global CEO Survey from PwC, from Nisha Pillay, me, from Mohamed Kande, this gentleman, and from the whole team. Thank you very much for joining us. Bye-bye.
Thank you.